welcome to downtown Grand Forks. This is Grand Forks Growth Fund Committee on April 24, 2023. It's approximately 4 p.m. Item number 1 is roll call.
Prairie,
Here.
Paul,
Here.
Mommy, Stowski, here, Weigel,
Here.
Whitney, Wolf,
Here.
we have a quorum.
Thank you. Item number 2 is minutes from meeting of March 20th, 2023. A discussion, or is there a motion to approve those? Moved by Osowski, second by Holt. Any further discussion? Seeing none, all those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries unanimously. Item number 3 is request for lease termination form communications. Mr. Phelan.
Chair Weigel, members of the Growth Fund Committee, thanks for having me again. Thanks for having me speak. We got interim speaker, interim microphones in the speaker. So we decided we have a city council meeting tonight, so we were going to be in the boardroom, but it's hard to put this on our streaming place. So I'm here back. We had quite a meeting on Monday. It was quite extraordinary in my career, and so I think it certainly rated in the top tier of meetings that we've been in. We started with a JDA meeting, and the first 2 items on the agenda were we're seeking JDA feedback, and we got feedback on both those items. That's why I'm here today. The JDA, as part of the Grand Forks Herald lease, did not move forward with terminating the lease early. However, they did say they would consider it. Number 1, if they got additional information that we spoke of, but more certifiable information, and then also coming back through the Growth Fund Committee was their request on both these items. So in that spirit, just to get you up to speed, Mayor Buczynski and I did meet with Mr. Wenzel of the Grand Forks Herald, and part of the discussion was, as we all do, we're a pretty good landlord. We're not perfect, but we are pretty good, for the record. And when people seek options moving out in the future, we listen to them, and what we said in that case is that we would move it forward to the JDA and get their feedback sooner rather than later. And so whatever we talked about was based on the concurrence of the JDA. So I did not ask anyone to move forward with an additional lease, but I did move forward the JDA as quickly as possible so we would get some feedback. We do think that it's mutually beneficial for both the Grand Forks Herald to move out of the building and to have others move into the building. We think that would fit with our ecosystem here in the building, and we'll go over some of the proposed tenants that are interested in moving into the building. Part of our thought is that we could wait until that May of 2024, or we could get moving sooner rather than later, knowing that the Grand Forks Herald was expected to terminate the lease and not move forward with the renewal at that point. Along the way, just because as a landlord, this Growth Fund Committee and the JDA, we did reduce down over this last 5-year term the space that the Grand Forks Herald owns. And so, as you recall, in 2021 of November, you moved their square footage from 5377 to 4252, and that was also recognition that things have changed. I approved when this was under construction. The Herald was hampered because we were under construction with noise and HVAC issues and all the things that go on when you're trying to renovate a building. And so I did approve over a 6-month period a reduction in their rent, also to recognize those issues and those inconveniences for the record. We think as part of, we also had a handout, and Mr. Conlon provided some information on that, what we've done. I think the Growth Fund and JDA were in concurrence that let's let the Growth Fund not, we shouldn't be just a overseer of property and collect rents. We should be about growing all these various economic sectors, and we've obviously worked hard on that, whether it's been agribusiness or in this case, the tech sector. And so since 2019, we have divested ourselves of a lot of our buildings, from Center Inc., which is down on South 4th here. When we sold that building, we still are a tenant in that building with Social Detox. We sold the remaining portion of the building of Cirrus Aircraft, and that was another positive move. And then Corporate Center 1 and 2 also. And you can see with some of the business park, we're down to 49 acres, and I think we started at 90 some acres at that point, and we have 5 or 6 really great clients in our business park that we move forward. That was really intended to really seed the future, get things going. And our intent was not to own buildings per se and not to own properties, but really to get private sector moving. So I would think as we move forward with some of those land transactions and we start to minimize that, that we really want to be more in that partnering role with private sector and expanding that business part. So that's been the theory. And why did we move forward with this building? This building was really moved forward, was try to move forward in the tech sector, create an accelerator, create a place in a hub of our downtown that we could really emulate the tech, UAS, and data analytics is really our intent. And so we looked at other models like in Green Bay, but instead they're building something new in and around their football stadium, where our intent was to build something really at the hub of our downtown, where we already have the built-in infrastructure. We have great buildings going up in and around us. This would be a complementary piece to that. We did buy this building in 2019 because it was for sale. And so since 2019, we've made some improvements. We did probably hold off during the pandemic to try to figure out what was going to happen during and after the pandemic. So I would say the high that we have here, we've shifted a few degrees to where we are with the programming and kind of what our thoughts were in the renovation, but largely since we bought the building in 2019, it's stayed relatively the same. I think some of the things that are going to go on here are going to be a little bit different, but the model's really held out. And then over the years, obviously, we've made some major renovations. We intend to make some more this summer with new heating and cooling, with some roof repairs. And then finally, what we're going to talk about today is the Herald space that we do. We have several tenants that we have followed up with. We did tell the JDA that we had some interested parties, and no joke, we did have some interesting parties. So we do have the letters of intent for 5 entities that I've included as part of your letter of intent. And then we also received some additional interest over the weekend from Praxis Strategies is wanting to come into the building because they feel like they fit this ecosystem that's building. And so they would be the 6th entity that would be part of it. I did provide you the ranges. They did have letters of intent of ranges of square feet. And so I think with Praxis, we're looking at 3 or 4 workstations. I think plus or minus, we're going to be able to take the blue area that's to the left of the screen there with Grand Sky, Thales, Detect Radar, Fenworks, and Aerospace Link to include Praxis. We'll fill that. We also have this hangar area that oversees the hangar areas over this area right here. So we have some space there too that people are interested in also. This space, the hangar and the area where the Herald was not part of the EDA grant, so we haven't touched that. That's good and bad. The good part is that we can spit that up for long-term space now. We all have to pay for it ourselves, but we're not going to be under an Economic Development Administration federal criteria. That will be for us to really define complementary tenants to this building and really drive what the EDA wanted is to create this as a tech accelerator in the UAS area as we move forward. So today, what I'm asking for is to allow Grand Forks Herald out of their lease early. It would be 11 months early. And if you do agree to recommend that to the JDA, we bring that to the JDA and provide them further information that they wanted, and they wanted your feedback along the way. And then if that's approved at the JDA, we come then back through this group and with more permanent leases with these entities and with some fit up, and we would likely engage architectural services. Right now, we've been working with JLG in this building, but we come back and working with these various tenants of what makes sense. You know, who needs walls, who needs locked offices, who can work in an open space. We work through all these various tenants on what their needs are as we move forward. So that's what I would ask today. And in particular, I think the Grand Forks Herald, I understand, has signed a lease. And so I think as part of our good faith and who we are as a landlord and who we represent as the city of Grand Forks, I would just put that in your further contemplation of helping out a Grand Forks private sector business that we want to continue to succeed in our community. So with that, I'd stand for any questions.
Thank you, Mr. Phelan. Mr. Holt.
A couple questions. Thank you, Mr. Phelan. So in terms of the letters of intent, say we approve this, Grand Forks Herald gets out of their lease. Do we have an idea of how quickly they could move in and how quickly they might be leasing the space, or do we have an understanding what that gap might be in time?
Sure. Mr. Holt, I think they want to get in there sooner rather than later. Right now, we do want to renovate that space because it does, look like the 1990s in there. And so I think all of them are expecting with their lease that they would have some fit up in their area. They're going to want to have some different workstations. And so there might be an interim period of time where they can work out of that space. But then obviously when we get to construction, there may be some interim places where we need to locate them in other alternative locations while they're, so I think it's some of both.
Okay.
And I'd really like to get going with kind of completing the rest of this building. And so everything is finished and it's new and all the deferred maintenance issues are gone and all the spaces are up to date. And it looks like it's 2023.
Just one more question. And then at last Monday's meeting, I did watch it, and Mr. Wenzel shared some, I guess, grievances that they've had as a tenant. So I assume this might be a question for Mr. Gosted, but as I assume, if we terminate the lease, there will be some sort of agreement signed. And would we include something in there that makes sure that they wouldn't, let's say, come after the city for additional funds for not being fulfilled from the lease terms in their opinion? Or is that legal?
Yes, it
Okay.
would include a term that would
Okay.
be a release.
Okay.
Of any claims.
Okay, perfect. Okay. Sorry to make you walk all the way up here just to say that.
Thank you, Mr. Holt. Mr. Curry.
Thank you. Yeah, we have a pretty packed agenda. Obviously this is, went through everything. This is kind of my background. So I thought I'd better have some sort of opinion on it. So I was like, I better do some research first. But anyway, I think in my opinion, I think there's three things to think about really in any transaction. And this one is no different. The legal, the relational, and the business side of things, right? So the legal, not going to get into that. That's, that's for the attorneys. Yes, I read through the lease. I think there's grounds on both parties for different things that maybe the lease wasn't completely abided to 100%. So obviously there's an argument to be made there. The relational, I think it's really important too, just to be aware of, right? We want to always be operating in goodwill. So just because we can legally do something doesn't necessarily mean that's what we should always be doing, right? So, and I don't have enough information to comment on the backstory. Obviously, the Herald has been in Grand Forks for a long time. There's been a really good relationship there for a lot of years. So I don't know all the backstory and all the information, so I don't want to comment too much on that. But other than state the fact that I think as a city, we've done a very good job of being business friendly, and I think we should keep that in mind. And lastly, and most importantly, I guess what I would comment on the most on is the business side of things. So when I look at this, really it's so we have a lease that doesn't technically expire for a year, right? So the first thing is, okay, well, if we let them go, what's our opportunity cost? So if we didn't have LOIs from a bunch of other potential businesses, that would definitely change the narrative. But because we do have these LOIs for businesses that we could lease at a higher rental rate. So really then you come down to the risk reward factor, like, okay, well, LOIs are not signed lease agreements. So we have to I put it back on really city staff to say, hey, how much degree of confidence do you have that these LOIs will turn into leases? And so from there, so now we're just a pure business decision on, so how much rent are we giving up versus the opportunity to get? And really what's that break even point? So, and so really the question I would have after all these comments would be, what degree of confidence do we have that these LOIs will convert into leases?
It's a very good question, and I agree. We need to be business friendly, and I think we're not perfect, but when things need to get adjusted, we have adjusted, and whether it's even having city forces do snow removal and all those things, and to some degree, this building relied upon contractors to do things, and it didn't work this winter because of all the challenges with workforce, and so we've taken that under our own workforces. And some of the issues with heating and cooling are just the equipment is exhausted, and so that'll get repaired this year. The roof is getting exhausted, and so that'll get redone too. So some of the things obviously we've inherited, but we went in eyes wide open, so that is what it is. And I think what we've done on business friendly, and this group has been part of it, whether it's been Ann Love and Corporate Center 1, Kitsona, You were business friendly with them because they were hit with two things. Number one was retail challenges. Secondly, the COVID pandemic did not, was really the death of a lot of businesses. You understood that, recognized it, and we worked through those things. I don't think that had anything to do with the JDA being not knowing how to be a landlord. I think it was more of a function of we wanted businesses on that first floor that would bring foot traffic. And when retail had a double whammy, you recognize that and move forward. So I think we've always been recognized that. With Cirrus Aircraft, we moved forward with that purchase earlier. And in advance of that, they also bought additional property from the JDA so that they could have some better certainty in here. And so that was another time where you looked at the lease and said, let's do that sooner rather than later, because Cirrus is wanting to expand. They want to move into the building, and they also want some greenfield land to expand. And I think if you talk to Cirrus, that's only paid off for. So I think we've adapted into good form. I think most Mr. Ryan, Johnny Ryan's worked talking with most of these candidates that want to come into the building. I think number one, our mayor spoke to, if not all, most of them himself personally, and to get that commitment from them. So he did that last week personally to stress the importance of this and to stress his word and to hear it himself. So I would say our confidence is high that they do want to move forward as noted.
So that kind of just, I guess maybe the point I really want to make is that it is really important for us to work in goodwill. That doesn't mean we just blindly give everybody what they want, because that would not be, we'd not be doing a fiduciary duty to the city and the taxpayer money essentially by just letting anybody just walk. So that's where it really just comes down in my mind to the business decision, the risk reward analysis, that's saying, hey, and maybe then what I would encourage if I was in a situation, maybe there's a middle ground where we can go to where it says, hey, they still got about a year left on the lease. Maybe they pay 4 months and they pay for 4 months and they buy it out, which then, or whatever that calculation may be, internally I would gauge that based on the risk reward factor and say, we think we can get X amount, filled up in that 4 months at lease out, and we do build outs and stuff like that. So from our perspective, we don't really miss a beat on cash flow. From the perspective, they, yes, they still have, they can still get out early, not for a full year, but they get some benefit of getting out early as well. So maybe there isn't a middle ground that we can't, have that dialogue on what works well for both parties. I guess it's kind of where I would sit on it. But I think that we'd be remiss to not recognize that there's also better business opportunity, but there's risk there because an LOI is not a lease. So just try to balance that risk with the reward, I guess, is my thoughts.
Thank you, Mr. Fair. Mr. Wolf.
Yeah, thanks, Mr. Phelan, for being here, and similar to what Mr. Query's line of thinking. And to me, the legal, I'll stay away from relational. That's something that's very important, and I certainly want our community to continue to be known as business friendly for sure. To me, there's value there. Hard to assign, but that is a part of a decision. And I go to the business side of things, and to me, I'm curious. First of all, with the at the JDA meeting last week, and then there was a no vote, but they did indicate that they'd consider with additional information. Was there any discussion about what that additional information was? Was there any discussion on what dollars and cents wise, or was it just bring back additional information? It was my first question.
Mr. Wolf, and I can also defer to our two council members too. It was a discussion of, with what we know now, we're going to vote no, but you can bring back additional information with some more certainty on the kind of companies that want to come into that space, what kind of space they have, what are we talking about, like a price per square foot. So there was some better certainty. To your point, there was more certainty on what they thought as we move forward. And I certainly, the mayor and I did at the time when we talked to Mr. Wenzel, did bring up the 60-day out as a starting point, knowing that we would have to discuss. If I would have taken more time, I would have started here, but I wanted to have the Grand Forks Herald know sooner rather than later kind of what the sense was leading up to even if it ended up to be the end of May, at least they would know well in advance of that. So it's a lesson learned, and it's my mea culpa, it's my fault. And I'm just trying to do the greater good of the JDA and the city of Grand Forks and try to work with all the private sector entities and move the community ahead. So lots of lessons learned, and I was not, when we got into the, not expecting an expose on this whole matter of all that we do. But we have to rise above and be afraid, and that's what I try to be.
No, I appreciate that. And so for me, if I were similar to what Mr. Crary had mentioned, I would look at it as in exchange for, I just look at it from a business standpoint, in exchange for terminating a lease early, and what additional investment of some sort by the city to get it ready to sublease, for the GDA to understand what is that number of potentially lost revenue plus additional investment, and then is it worth that to the JDA to get to the vision faster of the hive with the tenants there, which there is value there in my opinion. It is very difficult for me to vote, to quantify, to say should we do this or not without knowing how much investment to put in and how quickly that, how quickly we would get to that vision. But so those are my thoughts on the matter.
I think Mr. Wolf, that's a very good point. If we would have just extended it to the May 24th, which I think from indications Grand Forks Herald would not have renewed the lease, we would have taken this time to say, as we wind down that lease, these are the tenants, this is what we're going to do to fit it up in advance of that. So we're really speeding it up sooner rather than later. So if we had taken more time and not engage in the conversation, that's what we would have done, but we would have had these months to kind of lead into that, which would have been more sequential, if you will, as we move forward.
Mr. Phelan, what we've talked about making some repairs to that space and this building. When would we look at, because as I've thought about this over the last week, some of those repairs might be difficult to do while they're in that area. And so I look at it this way, the way things are going up in price currently, sure, we may let them out and it may be a $60,000 hit that the city takes. But if we do that now versus keeping them in that space for the next 10 or 11 months, what are the odds that those repairs or those fixes exceed that based on people and equipment and everything else that would go into those repairs? So that's something that I've kind of been thinking about over the last week as well. That risk reward, but also are we better getting all this stuff knocked out now versus 11 months from now when the price is only going to go up? So that's kind of where my thoughts are at this point, but I would, just for the record, Mr. Kavami is online. So Kyle, did you have anything?
Yeah, I just had one quick question. Thank you. Is there any timeline on when we would plan to convert the LOIs to leases? Are they not able to do that until after the repairs are made or the reconfiguration of the space is made? I'm just curious on that timing, because I think then we could know, are we out of rent for 3 months, for 4 months? What is the potential, I guess, what's our worst case scenario, assuming that we have to complete the repairs when the Herald's out, but yet can't sign or can't bring new people in until the repairs are fully done?
Mr. Kavami, I think that's a good point. So we discussed that we would likely, if we're leaning towards letting them out of their lease early, we would start to engage these various entities, the 6 entities, look at the space and where they best fit, what their needs are going to be from a renovation perspective. So we would start working with them right away, knowing that time is of the essence, and we want to try to get them into their space sooner rather than later. Some may need more renovations than others, but we'd have to get a sense of, we know generally where some want to go, and we'll have to look at the space and work with them. So I see us working with them through May on those issues, engaging the growth fund on here's what the various entities want, and then with the goal of we're going to have to bid any of those improvements, incorporate them into their lease. So hopefully over the summer and the fall we can be doing all this with some hope of early next year that we have the entities in place. Some maybe sooner rather than later based upon what we need to do. But we would start on that right away because I think all the entities are wanting to get in there sooner rather than later.
So potentially we're looking at, could be 6 months or 8 months without rental income.
Yes, or we talked about maybe there's some interim strategy where we can use the space, but there's going to be times when you got to be out of the space, and we'll make appropriate measures for them during that time. But because it's going to take some while to plan, design, and bid, I would prefer to allow the entities to move into that space. And there may be times where, in an interim fashion, they may have to move out while those spaces are being renovated to what they want to see as part of their fit up to those various spaces. So I think it's an and that get them into the space at some sort of rental, and then when the space is all fitted up, there will be a transition, and there may be some time where they have to be out of space while construction is happening.
Thank you. Ms. Osowski, did you have something?
Motion approval.
Move to terminate the lease of the Grand Forks Herald. Okay, is there a second?
I'll second.
Second by Holt. Further discussion, Mr. Curry?
Maybe a couple comments. One, I just want to make sure this is kind of articulated correctly, because we're talking about time where we will not be collecting rent during renovation. Well, that would occur regardless of whether this termination occurs or not. So if this went to the full duration and the Herald didn't leave till next May, there still would be however many months it's going to be to fit up. So it's not necessarily, that's kind of a separate issue, not necessarily tied into the termination of the lease, because either way, we're going to be out of that time period while we do the fit up. So that's kind of a separate matter. The other comment I want to make too is that where my mind is at is that this isn't, by letting the Herald, if we let the Herald out early, that's not necessarily, forfeiting any money. I think we really need to see the opportunity that it really actually could be long-term better, and it actually cash flow better if we can convert on these LOIs into leases. And so that's kind of where, again, it all comes back to that. And actually, there could be an argument be made that if we don't let them out, we could miss the opportunity with some of these businesses, because I can guarantee you, if they want space, they might not wait a year. They might sign a 5-year lease somewhere else. And when I look at this list of people that are interested right now, in my opinion, this is the exact list of people that we want in this building. So, I mean, this, obviously, at human nature, we probably tend to look at the negative side of things, but this really could actually be viewed as a really good opportunity to take advantage of somebody that, would also like to vacate. And we could hopefully, and again, it all comes down to converting those LOIs into leases, because all of these businesses, if they convert, then I would say long-term is a lot better property. And this is exactly the vision of the Hive from the very get-go. So I mean, we really need to consider that this could be for the best thing long-term, actually. But it all comes down to converting those LOIs into leases, because without that conversion, then yes, the city is going to be out the money. But so that's where I come down to, is that it's good to hear that those LOIs, talking to them, I really appreciate the mayor's reached out to each one of them. Talking to Mr. Ryan, the interest level in them, that they're serious. Now they might not all land as leases. We don't know that. That's a risk that needs to be taken. And so with that just want to add that as the discussions. Thank you.
Mr. Wolf?
And I think that's well said. I think there is value in moving the division forward faster. Is this the right amount, or what dollar amount do you assign to that? That's the question that again, the JDA had denied. I don't know what the value that they assign that for. So that's a comment. Where my mind was going before the motion on the table was to, if there is not a successful lease up of the space in X amount of time, then would there be some reimbursement to the JDA within a period of time? Because this is allowing someone out of the lease, which I'm in favor of being supportive. But if we cannot convert that space, then we are giving up money and investing additional dollars. That would have been my recommendation, would be to pursue something along those lines, if not rent it up before next year at this time, but that's not the motion on the table. So I just wanted to get that on the record as far as those would be my thoughts on from a business standpoint of how I would approach it.
Any further discussion? Seeing none, we have a motion and a second on the floor. All those in favor signify by saying aye.
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 Opposed, same sign. Motion carries unanimously. Mr. Phelan.
Thank you. Very good discussion.
We will move on to item number 4. Request for proposals for management of venture capital funds, Mr. Phelan.
Chair Weigel and members of the Growth Fund Committee, I want to ask Keith Lund to join me up here, but we briefed this at the JDA, also the same Monday, to get their feedback on moving forward with an RFP. I don't say they were for or against, but they were for it, or not to engage you as the Growth Fund regarding kind of in a similar way to what we just talked about. How fast we move forward before we have more certainty. And so in a similar vein, and this was a discussion at the Economic Development Corporation Board of Directors. And I'll ask Keith to kind of summarize that, but then in a similar vein, I've heard discussions at the Strategic Planning Group, at the EDC and among other places about should we look at someone investing our funds in this tech area to leverage them, to grow our pie, to look at broader opportunities to provide better due diligence than what we're able to provide. So in the spirit of that, concept, and if that makes sense, this is more of a spirit of should we start running now? And so that if it works out when you get the strategic plan back and you start reviewing it in May, and ultimately that comes back to you as the Growth Fund Committee and then ultimately the JA to approve that. And this is one of the concepts that kind of really gets to fruition through that planning, is that along the way we would have already been advertising this RFP. We would have created a selection committee or at least an interview. And if you move forward with that strategy, then you would have real information in front of you. You would have real firms, real information, more data than you would have if we didn't do that. Otherwise, you'd be kind of this, you would stop, wait till that recommendation came, and then we would take off again to say, let's go do it. So this is a strategy of doing things in parallel before we know the end, but with a lot of encouragement that we should look to do something like that. So in that spirit, that's what I'm here for, is that, does that make sense? And in this way, JDA didn't say yes or no, but other than, hey, that it makes enough sense to engage in a deeper conversation with the Growth Fund Committee. And then with that, I'd ask Mr. Lund to got this started. And the other thing the mayor and Brett Weber as JDA chair wanted is to have engagement with the EDC to get their sense before we brought it to the JDA and the Growth Fund. And I'll have Keith give you an update on what their feedback was.
Thank you, Mr. Phelan. Mr. Lund.
Chairman Weigel, members of the committee, thanks for having me this afternoon. And Chairman, Ms. Wasowski, Mr. Kvandy, sorry, this will be a little bit repetitive from just a week ago. In meeting with this group, your organizational documents, the EDC strategic plan, and the work of the strategic planning group for the Growth Fund, I think it's fair to say that we all have a goal of growing technology-based businesses and technology jobs in the region. We think we have the assets to do that. The University of North Dakota, I think, would be chief among them in the work and the investments that they're making. We did have a discussion, and we were asked by Mayor and JDA Chairman Weber to talk about this as a potential strategy to grow tech in our region. You know, the state of North Dakota recognized this in the creation of the LIFT program. I think we're all aware of that. And we were, I guess, motivated by that locally, and created the Accelerate Loan program as a means to attract companies to the region. You can think Safety Spec, which has been in front of you and you've invested in, and to grow organically companies that have grown here locally, and think Thread in terms of their growth trajectory. So I think continuing to do that seems to be you know, a strategy and a priority of people that are involved in this discussion. I think how do I characterize that? I think there is a reality though, and I think where this conversation is at today, that, you know, we locally, EDC and even city staff, I hate to speak for them, but we really have leveraged the programming and the due diligence of others in terms of making some of those investments, the LIFT committee, the Bank of North Dakota, and that type of thing. I don't think either organization is really structured today to manage venture funds or to have the experience to do robust due diligence on opportunities. So we've leveraged the experience and the due diligence of others, and I think overall we've done well and they've been successful. But really to take that next step and to help companies, really achieve, again, that next step to get beyond sort of that seed funding round and sort of where a public entity would venture capital. The example that is in your staff report, the thread example, not the thread, but the bushel example that Advance Capital provided is a very good one in terms of, some people have said friends, family, and fools, and then you get to seed and, then A, B, and C rounds, and then maybe there's an acquisition or, if you're so lucky in IPO, but those are very, very rare. We had a robust discussion based on the request of the mayor and Chairman Weber about is this a sound strategy, and others were involved in that, and I certainly welcome them to participate. And we had sort of pros and cons, and the pros, I guess, is what I've outlined already today. The due diligence, the ability to manage the experience, and the ability to manage funds, and to have access to networks to do that due diligence. That's what on the side of partnering with a venture fund. On the negative side, if you want to look at that, likely lose a little bit of control because you would expect that there would be an investment into a fund and they would make the investment decisions, and that those would just happen. But you could actually turn that too, and I think that discussion occurred as well, like you would likely make more sound investment decisions, and even though maybe the primary goal isn't return on investment in terms of dollars invested, it's the growth of the companies and the growth of the jobs, I think you'd have a better return, a financial return from those investments from that standpoint too. So all in all, I think it was a very healthy and thorough discussion about those pros and cons, and ultimately, and I wrote it down just so I wanted to be accurate. And obviously the EDC board is advisory in this capacity and bringing the thoughts and recommendations to this body. But our board, after that thorough discussion and consideration of this, did recommend that the JDA consider a partnership with a venture fund as a means to support growth and development of regional technology companies and to seek proposals from interested firms. That's not a commitment to accept any proposal, but to really explore what's out there in terms of a potential partnership. Be happy to answer any questions, and obviously there are many who have been involved in this discussion.
My question, I need you to dumb it down a little bit for me. So we would hire this company to manage the money that we give out in loans, but then you said we'd lose some control, and would they be making those decisions for us?
Yes.
And so now we have the EDC, the Chamber of Commerce, then we'll have these people. I guess I just don't understand how many different little subsections you need, just to bring in economic development. I mean, that's 3. So, and how much do I'm assuming we pay them, right?
It would be, well, I'll back up.
Okay.
If you don't, Mr. Chairman. I would imagine, although you could accept any portion of a proposal, I would expect that you would ask for proposals from firms of what that partnership would look like, and including what they would see as a meaningful investment. I could envision through such a partnership that the JDA could invest. I might even be here somewhere between $1 and $3 million into a venture fund that would make investments in companies in the region. And
So we give our money to someone and then they decide.
that's right.
How
It's
spent.
very similar to what the state of North Dakota did. They, the legacy fund, we certainly all heard about that. And for years and years, they invested, they had the portfolio managers invest globally, and very little, if any of that money, I don't know the numbers, actually were invested in North Dakota. They carved out a portion of that and said, we want to, not only do we want to have a return on our investment, but wouldn't it be even the bigger win if we invested in North Dakota opportunities? So they hired a firm, 50 South Capital, to make those investment decisions locally, because the state of North Dakota recognized that they're not staffed to manage funds and to make those investments and do that robust due diligence as well.
Who manages our funds now?
Who manage our funds now?
Yeah.
You do, I would say.
With your recommendations, right?
Sure.
So we're just getting another one of you.
Well, investing in a larger fund would bring more resources to bear potentially to opportunities in our region.
If I get down to council members, I think this is also, I think this is an or strategy. Some think it may be an and, but If you recall, we've had several firms, we'll call it tech firms that you've approved under our Accelerate Grand Forks loan portfolio, higher risk, 5-year loans, low interest. I think all of them have first received LIFT funding from the state of North Dakota. Then they've come here to say, you know what, I'll give you an academic example here. We got $1 million from the state. We want 250,000 from the LIFT. They got $1 million from the LIFT. We want 250 from the Accelerate Grand Forks. We've relied upon the Department of Commerce and their due diligence efforts. I think the Bank of North Dakota is going to get more involved in how the state invests in those LIFT programs. So those have been really successful. We hope, you know, in a few years, all those loans pay off as we move forward, because we have several of them out after 5 years. This is a theory of a thought. These are my thoughts. Then we kind of put a moratorium on those because the funds we set aside, we had used up. And then there was a thought of, how do we move forward with Accelerate Grand Forks? Should we continue to do what we do regarding regenerating these loans into tech loans? Or should we look at a third party that already has funds set aside, whether it's 50 to 100 million, and then put our $1 to $3 million into that fund to have them do in a similar way? And maybe they're more able to access due diligence. Maybe they're better able to access really high-end firms that we want to invest in. We could have them focus on Grand Forks, but they probably would look to other areas in our region to help fund. And so really, this is an opportunity, instead of us to continue to do what we've done, if we want to continue that, is to, if we move forward with a firm, maybe this is a better way to go. And you would still have an opportunity to say, with Accelerate Grand Forks, when that strategic plan comes back, when Marine comes back, what our loan portfolio looks like, what we can give out when Marine's going to come with all the funds that we have in the growth fund. Does this look like a better alternative to what we've been doing before? I think with the portfolio that we have, we're going to struggle to do both. To be frank, I think Marine, no secret, it's going to show that we're not going to be able to do both. That we're going to have to pick one area if you want to move forward with these higher risk loans. And so this is just an alternative strategy versus what we're doing now. And since we're kind of in a moratorium, this idea came out. Maybe this is a better way coming out of the moratorium to at least take a look at it. It's still going to come back, because I suspect when we do the RFPs, we're going to look at the various firms, what they do, how much we can leverage, what kind of fees they're going to charge us, and we can run through all of that. Pick the best firm, but ultimately we're going to have to move forward with a contract with Mr. Costa. So it's a long road for us to get to that finish line, but it just provides you more information, Councilmember Osowski. If you do want to move forward, maybe this is an alternative strategy.
So can we downsize the EDC if we go this route?
I think this is a way to, I think what the EDC does is they have various economic clusters that we're really trying to drive in our community, including tech, right? And so really what the EDC is doing, they're trying to leverage the growth funds to grow the tech sector. And in this case, that's the loan portfolio where a lot of these firms are going to start in the EDC. They're going to do some vetting, but now we're going to have a potential fund that we can bring these firms to, that will have some more horsepower, that will be in this sector. And so instead of the EDC coming to you or maybe even working with the LIFT program, this is an alternative strategy. They're going to be doing similar things, but we're going to have some more horsepower and some more leverage.
So will we still get to vote on these companies, or are we just losing all control?
I think that's going to be part of the RFP process. And when you go, how we design the RFP, and when we bring the firms back here about what control that we want, what we're going to be able to do, what kind of decision making we're going to have. I suspect all firms, and I think I was talking to Keith, I think the state has up to 5 firms that are helping support the state of North Dakota do this. I think that's part of the RFP of what kind of control do we want. And really what we're here today is, does this concept make enough sense so that we should have our team work with others and start putting together an RFP, because that's going to take a lot of time and effort. And if we're not interested in doing that, we want to manage our time.
Can I jump in if that's okay?
Sure. Yeah.
So provide a little more context, especially Mrs. Osowski. Well, this, when I saw it on the agenda, was a little more of a surprise to me as well. So this, we've been having this dialogue with the strategic, like the growth fund strategic meetings. And so where this is all coming from. And so right away I was a little hesitant, but now like hearing more makes more sense that to do the RFP, just to see the options that are out there without anything being committed, because from the strategic side, some of the discussions that have been had is that we have X amount of funds, which will still determine what that amount is. And so we have two options with those funds, either one, as a body of, you know, we all have our own full-time jobs. Are we trying to pick winners and losers, or is it fiduciary, or is it a fiduciary duty to maybe find somebody that this is what they do every single day and say, hey, instead of us taking X amount of money and trying to find those companies and giving them, let's give that same amount of money we would and have a third party that this is what they do every single day, that they make money doing this, so they're fully incentivized to pick successful winners. Is it worthwhile to entertain somebody else doing that? Now, the question and the dialogue that we're still having that we hadn't come to is that by doing that, to the city's perspective, you give yourself another asset or investment vehicle to grow that pot. But the downside to that, to your point, is you lose complete control. So by giving those, most likely, I mean, we'll see the RFPs, but most likely when you give them that money, you're giving them the authority to make your investment decisions. And so that's where, again, the conversation, and let it be known that nothing had been decided on at all, because we were all pretty torn. It's like, on one hand, you know, I think part of what I like about Accelerate, what we had, is that we had an emphasis on Grand Forks and jobs. You know, we wanted to create jobs here and grow companies here. This would be a little bit different mindset, in my opinion. And again, this is a little premature, but in this one is really just trying to build a portfolio, right? And because they wouldn't necessarily be Grand Forks, they might not even necessarily be, you know, Dakota. I mean, we can try to stipulate all that. And again, now we're getting farther ahead of ourselves. But just to provide context, is that the strategic, the growth fund strategic meetings, that's what we're trying to figure out, is like, what's the best way to allocate these resources? Are we best suited to make those decisions? Or do we let somebody that does it all the time? Now, there's pros and cons to both. And so the only reason I would support this now is just because I for sure want to make the record clear that I don't think we necessarily accept the, you know, an RFP, but at least get that dialogue going. So we have all the options on the table. So as a committee, as the JDA, can make a valid, an educated decision on what is the best with resources that we currently have.
How much time and money does an RFP take to compose? And also, I thought the ADC was the third part. That's why do we have so many? Why do we have an EDC? And then we need this company. And so and I mean, let's just address the elephant in the room. The last project, you know, that was given money to lose complete control over where our money goes really concerns me, especially with what happened before. And then what are we just like hiding those things behind private companies again? You know, where then the public isn't even aware of them because we've turned over all our control over to this company. And so I find that very concerning, because we already, you know, weren't told right away by the EDC, and that's our third party, and now another one. So I think we should be really careful going down those routes.
I totally agree. And so that's why, like, right now, without question, I would not agree to a third party company right now without seeing the details. That's the philosophical question we need to have, is that maybe think of it more of like, if you have a 401k, your company, right? That your company's they're not actually making those trades, right? They're hiring a company to host that. It's similar. So it's a completely different avenue from what the growth fund has been doing. Essentially, in the city, in my mind, would then have an investment portfolio that would totally agree. You'd have no control. It's just an investment arm. So, and that's where we have to decide and weigh. And I 100% agree. You're saying we lose control on which companies get funding. I think the idea right now is just at least to start move forward on seeing what that would look like. So we have the option on maybe we scale down the growth fund and the size and of the allocation we have.
Like maybe could we put in there, you know, like certain questions that could be asked about like national security even before it's even considered for those programs. I just want to make sure we don't end up in the exact same situation that we just found ourselves.
100% agree.
I think, one second, Mr. Lund, I think where we're at today is the question is, do we want to explore this? I think that's the only place that we're at. I think there's arguments that are good on both sides. But it's truly, do we want to look at it?
How much
And
money does it cost?
I think that's where we're at today. So, Mr. Lund.
Yeah, thanks, Mr. Wolf. A couple of points. First of all, I want to talk about scalability and the funding that we have. So we have traditional programs that we've had probably for 30 years that are companies that are mature. Lift and Accelerate were programs that were designed to help commercialize technology. So kind of when you're nearing getting into commercial activity or either entering new markets. So it was pretty early. But I think the example that was provided in your staff report, it's the stage of the venture capital in North Dakota that was provided by Badlands Capital, but it really is the bushel example. Venture capital, the kind that we're talking about today, and who knows where this will go. Lift and Accelerate are not sufficient to in terms to grow a company to that level. Airtonomy, which is now Thread, received a $15 million Series A award through Badlands Capital. No amount of resource that we had locally or at the state level was going to be able to do that. There are a lot of funds out there globally, nationally, that have an affinity of certain geography. We'll be happy to invest $8 million if you move to Portland, as an example. This is a resource. North Dakota saw this as an opportunity to invest in high-tech, exciting, high-growth companies, but to try to have that activity happen in North Dakota. This is another strategy, hopefully, depending on how the proposals come in and what kind of a presence that they have locally through that relationship to do that in Grand Forks and the Grand Forks region. So again, it's exploratory, but I think it's an opportunity to really to help, accelerate companies through that period of time where we don't have the resources to do that today, and really to address another, Ms. Osowski, EDC, in terms of, how this affects EDC. EDC doesn't have any dollars to invest in companies, have never had what I guess I would call deal dollars. It's our responsibility to help and work with our partners to develop opportunity and bring those to the right partners to help move those through the process. So this would be, as Mr. Phelan talked about, a potential and strategy. I kind of agree, and I think if Maureen come up here, she'd almost insist on it, but because there are resource realities, but this doesn't change the amount of money, actually increases the amount of money because we have venture. If we go down this path, we have venture money here that would leverage our smaller investment for a larger possibility. Mr. Wolf.
It's good discussion. Thank you. So to me, this is something that I'm in favor of pursuing from the standpoint, as has been said. I think I view this as, the EDC being a group that helps recruit and sell our region and connect with the right groups that we want to have here. Where something like this to consider would be, as has been said, as a group hiring somebody that knows is that the right company to have here. So do they believe in the vision? Is it in the industry, and the EDC is the group that helps sell them on this region? I would say that I agree with Mrs. Osowski. I mean, I think within the RFP, you can put different stipulations, you can ask different things about, and maybe a requirement for our investment would be, we do not, do you invest in this type of entity with this type of ownership or foreign countries? I mean, I think we can ask those questions and should ask those questions to make sure that whatever our investments are in companies that we would want, and I would be in favor of that. And then I would say we've had a group that has been working on this process, and it sounds like is in favor of pursuing this. But to me, it's we haven't heard from them yet, and with them, would it be our vision then, if we're in favor of pursuing this, to let that group know that we're in favor of this, and then have them come up with maybe some of the things we should ask through the RFP process? Would that be the next step?
Mr. Wolf, I think that's a very good process, because we're going to be coming forward with that strategic plan. I think we can engage that group of the kinds of bullets that we want in there. And really today is, if we just, not that we need a vote, but just some feedback about yes, but, And I think we've heard a lot of that great discussion so that we know what we want to do. So if we bring the strategic plan through, we can start putting some meat to that RFP, what it would look like. So when we see that bullet, we want to try this, we can then have maybe a few white papers to what we would want, what would it see looking like, so you can actually look at more details when you look at that one bullet about we want to try this and what it means and that sort of thing. I think to Mrs. Sowski's point is we are trying to do some unique things here. And, you know, Accelerate Grand Forks was a unique complementary program to LIFT. It's not that every growth fund will do that, but it was an opportunity for us to try to grow the tech sector with jobs and opportunities. And I think we've been successful trying to drive up our strengths in UAS. And so I think we have been successful in that way. And I think at the end of the day, the JDA is going to be responsible because they hold the growth fund portfolio. And in this case, that's the city council and the mayor. Kind of the other arm of the city of Grand Forks is ultimately going to be responsible. But that's why these committees are so important. So before we get to that end, then we've got a lot of strategic input and advice along the way.
Mr. Kvamme?
Yeah, I just wanted to echo some of the same things. I think I was a little surprised to see this, you know, at the growth fund before maybe it went to the growth fund strategic planning group. And so if the intention is to provide more options to that group, then that makes sense. Otherwise, you know, I thought maybe this would be more appropriate after the fact. Understanding what the strategic plan growth fund group thinks is necessary. But if we're just looking for more tools for them, then that makes sense. But otherwise, you know, as everyone else has said, I think there needs to be some more input.
Thank you. Anything further from anybody?
So that with Chair, what you'll see is you'll see in May, obviously Mark Schoen Praxis is working on the strategic plan that will be coming through. And in the meantime, based upon the feedback that we've heard, I'm not going to plan to bring this back to the JDA just because, you know, they've had the conversation that they've kind of given you the vetting course for this. So as that plan comes through, we'll try to put some more information together on this particular item as it moves through you and the JDA about what really that means in more fruition.
Thank you. All right, we will move on to, I lost my agenda. Apologies. We will move on to item number 5, which is the RFP for room naming rights sponsorships at the Hive. Ms. Richards.
Good afternoon. This RFP is very similar to one that you may recall from a few months ago that we issued for naming rights for the building. This would be a similar process for interior spaces. As the city attorney has advised us, this is the selling of an asset, so it needs to be a public process. When we did the first RFP, we didn't get much of a response, but that just means now we can accept proposals on kind of a first come basis. So we have, we've got that public process out of the way, so to speak. We will take a little bit different approach this time. Now that the building is further along, we're looking at, assuming we get approval to proceed with the RFP, we're looking at holding a kind of a soft opening event that would bring potential sponsors into the building. They could actually look at the spaces that they would be sponsoring, and there would be, you know, a good opportunity to see the space, talk to staff about what we're looking for and how the process would work. So again, attached to your staff report is a draft RFP. Some of those dates will probably change. The RFP says we're looking at that donor event May 18th. That'll probably get pushed back. Either we don't want to get too close to Memorial Day, but we'll either sneak it in right before or right after. And then, as with all these RFP processes, once we go through this process to collect proposals, we'll have a review committee, assuming we get proposals, we'll have a review committee that would then look at those, make a recommendation to you, and then on to the JDA for final action.
Ms. Richards. In the interest of time, we do have a couple items that we still need to get through. So does anybody have any comments, concerns, any motions?
Do
you need a motion, Ms. Richards?
Yes, we do need authorization to issue that RFP. That's all we're asking for, kind of like the previous item, no selection.
Moved by Osowski, second by Holt. Any other comments? Seeing none, all those in favor signify by saying aye.
Aye.
Opposed, same sign, motion carries unanimously. Move on to item number 6, EDA RLF update and plan certifications.
Chair Weigel, members of the committee, we have kind of two things to cover as a quick update on the EDA RLF, what we had called C-Run during the pandemic, during its initial disbursement period. It was funded by an EDA grant to establish the revolving loan fund. And it's kind of confusing because at one point we had what we call our legacy EDA RLF, which we defederalized as a match for the EDA grant to do the fit up of the Hive building here. But this is our new EDA RLF, and maybe we can come up with a fun new acronym other than C-Run. We'll work on that. But generally, there's a loan update for you attached to the staff report. There's the status of each loan. The biggest update is that our current balance or cash available for lending is just over $300,000. By the end of this year, we anticipate that to be closer to $500,000. And the EDA only allows us to have $253,564 available as cash available to lend. So by the end of the year, we're going to be working with the EDC staff to find deals that will work for us to be able to lend that money out and stay compliant with the EDA. As part of that, we need to recertify our RLF plan. We do that annually. The last few times we've done that as part of amendments to our RLF plan to get the funds out as quickly as possible to help businesses through the pandemic. But in this case, as we are going through our strategic planning process, we're hoping to certify the RLF plan as it is on an interim basis, which is just a gap financing tool primarily for primary sector businesses. And then once we really kind of start to conclude our strategic planning process, we might come forward with more updates to that plan to say, we want to use this gap financing tool to target these specific sectors or things along that nature. So in the meantime, I'm here to stand for any questions, but looking for a motion to certify the RLF plan originally approved by the EDA.
Thank you, Mr. Hanson.
Well, first quick comment, just to reiterate, all the CDOT money, that is all federal dollars that essentially that we disperse, and now we're rolling it back into our money that we can essentially control it now, but it's all federal funding, correct?
Yes, it's all federal funding, and it will be, it has to stay as an EDA revolving loan fund for the next 7 years, at which point we can go through a similar process we did about 1.5 years ago when we defederalized the RLF, and then it truly becomes our money and there's no federal claim to it.
Great utilizing federal funds, and yeah, motion approval.
Moved by Crary, is there a second by Osowski? Any further comments? Seeing none, all those in favor signify by saying aye.
Aye.
Opposed, same sign, motion carries unanimously.
Thank you.
Thank you, Mr. Hanson. We'll move on to number 7, mobile recon past due loan.
Excuse me. Good afternoon, Chairman Weigel, members of the committee. In the interest of time, I won't go through the full spiel, I guess, full background on this item. We've been here a couple times on this. First back in December of last year, and then on an interim basis between then and now, essentially coming forward with a couple variations of Mr. Dowell's, the CEO of Mobile Recon, sort of his various stages of his sort of workout plan, I guess you say, or path to success. I think he's called it, and there's a couple of versions of that attachment to the staff report. Essentially, as I brought that forward to this committee over the past several months, his sort of plan forward remains the same in that he has this start engine sort of crowdfunding outline. I understand between some family issues as well as some, I suspect some business ones, there's been some hurdles in getting that launched and getting it going. His most recent path to success document updates that process and lets us know where he's at on that. But as I brought this forward to you guys over the past several months, and certainly from staff's perspective, there's a desire for some sort of resolution, reaching a resolution of some sort. Which is what we hope to kind of bring to you today by we're recommending setting some form of deadline of June 1st as to basically enact the proposal that he's laid out over the past several months, which is to get caught up on his full past due balance. And then resume regular payments after that date. Should that not occur by June 1st, our thought is, our recommendation would be to consult with Mr. Gosted in his office as to what, I guess we'd say, default proceedings look like as of that date. I have talked to both the private institution that they've worked with just as recently as last week, as well as the North Dakota Development Funds a couple weeks ago. I think both institutions are hearing the same thing from Mr. Dowell, which is good that we are, and just sort of taking a similar approach to us, is kind of wait and see how the start engine piece plays out and kind of evaluate options from there. So with that, I'm certainly happy to stand for any questions that you might have, but that's what our recommendation is.
Thank you, Mr. Conlon. Mr. Wolf.
Yes, thanks, Mr. Conlon. So thank you. Answers. We have been in conversations with the other lenders in this case here. At this point, they are watching, seeing, have they approved officially a plan to not pursue other actions until June 1st at this point?
In my conversations with them, I don't think anything as formal has been determined yet by either. I think it was largely sort of a wait and see. I know they've both been in contact with Mr. Dowell and have been working on, you know, like it's kind of same as us, is trying to figure out a workout plan and get back up to speed and figure out a way forward, which has adjusted kind of over the past several months as it has for us. But in terms of like a formal setting of the date, I don't know that any of them, I didn't get that then that they had set a formal you know, date.
Okay. And that might be helpful to, assuming things do not happen with the equity raise, might be, I would encourage us to maybe a conference call to determine what the group would be, and including city council in that would be appropriate. It looked like in the documents there was, I think the word was, it was confirmed that the equity launch would be April 23rd to 27th. And then it did talk about in the plan submitted that funds would be available around mid-June. June 1st is the date we're talking. So I'm curious on two things. One is how do we know, has there been confirmation from this source to raise capital that they are going live?
I have not reached out to Start Engine personally. As of last Friday, I've not checked as of this morning, but as of last Friday, I don't know exactly how their system works by any stretch, but I've searched on Start Engine and did not see Mobile Recon as an available company to search in. Doesn't mean that it's not on that. I don't know what the system's like over there, but so in turn on that side of it, that's all I really know on that side of it. In terms of the June 1st date, I asked Mr. Dowell if the June 1st date was workable. He said yes. As part of the attachment he provided, it said he didn't anticipate to have funds until mid-June. I stuck with the June 1st deadline. My thought is that if between June 1st, like you said, assume the payment doesn't come in. If by June 1st that doesn't come in, we'll consult Mr. Gosted, and I can't imagine we'd reach a resolution between us and the other creditors within 2 weeks. Should it all come through and he make the full payment, then the default proceeding don't need to continue. He's paid up and we continue as planned. But that's sort of the rationale for the June 1st date.
I appreciate that final point. And then, so I would say, and perhaps he would have some confirmation that this is going to go live here, actually this week, but it's soon. So I would say, an update from him on how this is going. And I think for us to, if there is not progress that we can see, I would encourage us to visit with Mr. Gosted's office, as well as the other parties involved, about, is that June 1st or should be, is that still realistic, or should we move further if there's no progress? So sure. Those would be my comments.
Mr. Wolf.
I would just add on to that. I mean, so correct that right now there's nothing on Start Engine for them. The good part about Start Engine is that you can see a company on here, you can see how much time is left in their campaign and how much they've raised to this point. So I would say, I mean, we should try to plan to have an update at our May meeting. We'll probably know where we're gonna fall with this thing, right? And see if they're gonna be meeting the goals or not. That was my question, was what Mr. Wolf's question was about. You know, according to him, it doesn't look like mid-June until any funds would be available. So, but we should be able to at least check to see if those funds will be available on Start Engine. So
We could just add, you know, we can certainly bring back, should, you know, between now and then Start Engine go live and it begin being, you know, funded or something, we'll bring back an update regardless at the May meeting. And should at that time, you know, funds be rolling in and it's looking good, we can certainly at that time bump the deadline if we want to, or that sort of thing. Like I said, the June date was sort of, like I said, it was between myself and Mr. Dell trying to find something workable. And to attempt to set some form of resolution to this, as it has drug on for, that date has pushed back twice already. So trying to set some kind of hard stop. But again, should circumstances change, it's certainly.
the only other thing that I'd add is, I mean, we got a lot riding on Start Engine here, right? That, I mean, we looked at the 3 different paths to success. I mean, it just changes the date of the launch of that on those 3, right? So I don't know if there's been other conversations about if Start Engine doesn't go as well, what a backup plan is, but I would say that we should probably have those conversations as well. I mean, you're relying on people finding you on the site and choosing to make the investments that you hope that they make. So again, it's just a lot riding on that hope.
Is there a motion anybody would like to make?
Can we like punt that till May's meeting and just see how it, just before we motion to have like a firm June 1 deadline? Let's see if by May if we can get a little more information and see if get more Start Engine, because yeah, by that meeting, we should have an idea of whether there will actually be funds for June or not.
So should we move to table it until, I'll move to table this discussion until the May meeting.
Second.
Postpone.
Our city attorney likes postpone that.
So I can amend my motion.
Yes.
I move that we postpone this until the May meeting.
I'll still second that.
Okay, a motion by Mr. Holt and a second by Mr. Crary. Seeing no further discussion, all those in favor signify by saying aye. Opposed, same sign, motion carries unanimously. Item number 8, informational items on that.
Yeah, I'll be,
Mr. Conlon.
yeah, I can be quick. Similar vein, past due loans I've mentioned before, Amy's Place, one of our startups. We've touched base with her. She hasn't formally determined yet. I think she's still waiting to hear some things from the base, but she has indicated that she is intending on closing the business. We'll plan to have conversations with Mr. Costed's office as to what that looks like. Also, French Taste, both the C-Run loan with us as well as startup also has determined that they're going to close. Not a whole lot more info than that right now. Again, same as with Amy's Place, we'll work with Mr. Costed's office and figure out what that looks like, what next steps look like in terms of the ability to collect on those. So that's all I have.
Perfect. We'll move on to item number 9, adjournment. Motion by Osowski, second by Wolf. All those in favor signify by saying aye.
Aye.
Same sign, motion carries unanimously. We are adjourned.